Just as the spectre of the global financial crisis seemed to be retreating, it's come creeping back. For the past week, world markets have been tumbling, spooked by signs of weakness in the financial powerhouses of China and the United States. In Australia, the market recorded its worst quarterly performance in 18 months. Here's finance correspondent Philip Lasker.
In trading rooms around the world, they're asking the same question. Is it all going pear-shaped?
We're having a mid-cycle slowdown in China. We're having troubles with sovereign debt in Europe and very weak growth, and also signs that the US recovery is starting to lose momentum.
Share markets everywhere sold off after weaker data from China was followed by softer consumer confidence numbers from the United States. President Obama and Federal Reserve Chairman Ben Bernanke attempted to counter the negative sentiment.
We share the view that the economy is strengthening, that we are into recovery.
But global markets share a growing anxiety about a faltering recovery and a double-dip recession. Markets around the world are at multi-month lows, except for Australia, which is back to the levels of a month ago. Analysts say markets are also coming to terms with a new reality about corporate profits.
Expectations had been set far too high, and our view had always been that earnings forecasts were too optimistic, even if you avoid a double dip.
Certainly it's becoming harder to avoid talk of a double dip.
I don't think it's inevitable, but the odds of it occurring certainly is rising.
Interest rates on bond markets also fell to levels suggesting a recession is on the cards. The prevailing view is that Asia and world stimulus measures will pull the economy through this year. A recession could come later once the immediate threat has passed and governments take an even more aggressive approach to reducing debt. Philip Lasker, ABC News.